such as recession or massive stimulus passed by Congress. And so I think that is an interesting piece of this as well, is that we're seeing very substantial swings in treasuries over the course of this year.
The piece that is interesting to me, and look, it's all interesting, but the piece that's most interesting to me, I'll say, is that for the last couple days in October through pretty much all November, lower yields meant higher stocks.
Yep.
Bond prices were going up, which meant yields were coming down, and equities, proxied by whether you want to pick the S&P 500, the Dow, the Russell 2000, the NASDAQ, they were all up more than 8% in November.
Yeah.
So it doesn't matter which index you picked, you were still like, hey, U.S. stocks were flying in November.
Yeah, we were lovingly referring to that as the everything rally. Bonds went up, stocks went up, gold went up, crypto went up. It was an everything rally.
The interesting piece here is that even with yields continuing to come down in December, stocks have struggled to make similar types of gains, which, look, you would kind of expect. I mean, if you were to rally 8% every month, that's kind of ridiculous. I mean, you just do that for a quarter, and you're talking about north of a 25% gain. So you're not going to get the same impact month after month after month. But the piece that why it interests me is if falling yields were the only thing that were driving the equity rally, then falling yields should be continuing to push equities up, and they haven't the last few days. Again, it's not like the market's fallen apart, but the S&P 500 has effectively plateaued just under 4,600. We've been hanging out right around like 45, 75 for the last week and a half now. And during that same time period, the yield on the 10-year Treasury has gone from around 4.35% down to 4.15. So another 20 basis points in yields declining. And the stock market is saying, "Now we're good. We're just hanging out." So, what does it mean, Mike? Tell me what it means.
That's what I was going to ask, is what does that mean for the dominant narrative? Because I think for the month of November, the dominant narrative was soft landing is here, lower yields means higher stock prices, and inflation not of concern anymore. The shift that we're seeing here, I mean, granted, you've just seen stocks rally quite a bit, so I don't want to read too much into it. Maybe it's just people cooling things off for a moment here and digesting all the information, but should it continue? Should bond yields continue to fall and stocks refuse to move? Then, to me, that is an indication that investors are moving on from the inflation concerns and are becoming more concerned about recession.
So I don't know that it's that investors are more concerned about recession. Because I think that if investors were concerned about recession, you're not just slapping an 18.5x forward earnings on the S&P 500.
Which is why
saying,
I said,
hey, we're cool, we're hanging out.
Yeah, you do have to give this more and see what actually happens here. But if bonds were to continue downward and stocks either sold off or stayed where they are, I would find that interesting.
What I think we've gotten to, again, you've got U.S. equities. The S&P 500 is now trading about 18.7 times forward earnings. The 10-year average on this is 17 and change. So I think that the piece that I look at as it relates to this is equities now have the soft landing priced in. It's not necessarily that the world is falling apart. It maybe, I don't know. But if you're trading 18.7 times forward earnings, and you're saying, hey, we think that over the next 12 months, forward earnings, earnings in the S&P 500 are going to be, 240, 250 and change. Okay, you're pretty much fully priced then. It's outside of bubble scenarios, you're not going to get to like 21, 22 times forward earnings. That's just not, you just can't get there.
Sustainable.
And if you do get there, it's just not sustainable. Like, it's okay, now you start getting nervous about where do we go from here. So, and I was talking with Mark Fandetti about this the other day. Here's the scenarios that you lay out. So let's say that you get the softish landing.
Which, let's define again.
Softest landing, hey, for 2024, you don't have unemployment going over 4.5, and you don't have inflation going back over 4.5. In that scenario, you're probably fine here because you still have growth. You still have a runway for companies to add to earnings. And then you look out a year from now, and it's okay. The S&P 500 might have, $270 in earnings, and there's a path for it to rise from there.
Mm-hmm.
That is your very narrow path that you have to navigate, because if you get the hard landing, meaning recession in Q1, Q2 is when I think you would see it at this point if it were to show up. Well, if you get a recession, typically during recessions, earnings come down by 10 to 20%. And multiples typically contract into the 13 to 15 range. So your hard landing, you've got like 30 to 40% downside in equity markets. Again, I'm not saying that it will happen. I'm just saying that's your potential. If you have again no landing, where hey the economy slows and then instead of just kind of soft landing, let's say it reaccelerates and takes off again. Now you've got inflation that might not be extinguished because it's still showing up when you survey people about their inflation expectations. It's still high. You still have, people spending thousands of dollars on Taylor Swift tickets and stuff like that. There still is the possibility that inflation rebounds. And now if that happens, then this whole long end of the curve going down where the 10-year's gone from 5 down to 4.1, that's probably got to unwind back up and then go higher because now you got to raise rates further because inflation's back. And then you have kind of, in my opinion, a repeat of 2022 where rising rates are really tough for stocks and you get whacked there again.
Outside of Congress or the Fed doing something genuinely unexpected, so Congress passing stimulus or cutting taxes and the Fed dramatically lowering rates without a recession, where do you see a case for that reacceleration? Because I have a tough time seeing it.
Oh, I do see a case for it, absolutely.
Where does it come from? Where do the dollars come from for the reacceleration?
Well, keep in mind, I'm talking like a year from now.
Sure.
So I don't think there is any concern that I have in any meaningful way that you have a reacceleration in inflation in the next 6 months.
Sure.
Because there is nowhere for it to come from. The place that it comes from a year from now is, okay, you've got wage growth starting to reaccelerate again. The labor market gets tighter because companies start hiring in higher numbers again. Job openings, start to accelerate upward. It's all that pressure that we saw before reappearing because companies say, hey, things slowed down, but we didn't go into recession.
Right.
Now we got to ramp up because we want to make the sales, and that's where the impulse comes from, in my opinion.
Yep.
The other places that it can come from, commodity-based over that time span. China's economy is in the absolute toilet right now. China's economy might be down in the bowels of the sewer system where the Ninja Turtles were born. It's really bad right now. A year from now, it might be rebounding. And that creates inflationary pressure because of commodity demand and stuff like that.
Yeah, you have
Europe's
demand for
economy
oil.
is very bad right now. As all these deflationary things go through, remember, when we talk about inflationary impulses, most of the time they're compared to what things looked like a year ago. So, housing, just as an example. Hey, we went from 6 million homes being sold down to 4 million. If you go from 4 million up to 4.5, that's an inflationary impulse. There's more growth there. There's more money coming in. And so those are the things that can happen a year from now. I'm not saying they will, but that's my path if they were to happen.
Mm-hmm.
Let's take a quick break here, and when we come back, let's see. We got more inflation stuff. Do we want to talk more on inflation? Anything else you want to cover there, Mike?
No, let's move over to homebuyers.
Perfect. Let's talk about homebuyers and why they may be catching a bit of a break in the next couple months here.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30 only here on the Financial Exchange Radio Network. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives, Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
We got a little bit of a sweet spot developing for homebuyers over the next couple months here, and I say that with some context that's needed, but here's the gist of it. Late October, 30-year fixed-rate mortgage hits over 8% nationally, according to Mortgage News Daily. Today, according to the very same source, we're at 7.04%. We're down a full percentage point in 6 weeks.
What have you done for me lately seems to be the only thing that's driving these markets right now.
So here's the interesting thing that you have is when interest rates were higher, again, closer to 8%, a lot of inventory started, not a lot, but inventory started building a little bit on the market. We actually now have higher inventory levels than we do a year ago just because stuff was sitting for a little bit. So you've got some inventory sitting out there now. You got mortgage rates 1 percentage point lower, which means if you're putting 20% down, you have about 10% more purchasing power, and there's more inventory. Little bit of a sweet spot the next couple months, especially around the holidays, to potentially find some better deals than maybe you have in the last 6 months or so if you're trying to buy a home.
Yeah, mortgage purchase applications rose 15.7% in November with those rate declines. So it's interesting. Both the supply side has bumped up a little bit, but the demand piece is incredibly rate sensitive, right? We're seeing very dramatic interest in just a slight decline in interest rates, right? It's not like we're back to 2021 levels of interest here. We're still sitting back on where we were in July, August timeframe in terms of where rates are, but nonetheless, you've seen an uptick in activity there. In spite of, remember all the stories we were reading, like, I'm just taking a break from the real estate market. I'm stepping out. I'm giving up on the home buying process. I don't buy it. I don't think so.
So this is also why I think that if you do have a recession that materializes in the first half of next year, I'm not convinced it's a particularly long or deep one, because what you have right now and what you're seeing in the data here is that if we were to see, just hypothetically, let's say you see another 0.5% to 1% drop in mortgage rates, we get down into the low sixes.
Yep.
How many people come out of hiding and say, yup, not only is it time to buy, but hey, you know what? We can finally sell our home because with rates in the sixes instead of in the eights, we can actually find another place to buy where it's not, the same type of cost prohibitive to us that it was before.
Yeah, that inventory side of the equation is it's tough for me to see where that goes because, logically, if rates are a full percentage point lower than where they are right now, I would expect it to pick up. But it just did not pick up for the last several years, and you have a lot of folks who probably renovated homes and made themselves quite comfortable and are not ready to leave at this stage. And likewise, if you're one of those fortunate few with a 3.25% mortgage, 6% sounds a lot better than 8%, but is it enough to really make that move? I don't know where demand and supply would match up in the event of 6% mortgages, but I have a tough time envisioning a massive flood of transactions, and it spells out a different story, which is I just have a tough time seeing prices come down anytime soon.
Well, I don't think that I think no matter what, absent a recession, I don't know that there's good news for pricing.
Yeah, I'm with you there.
I think in terms of transactional volume, I think you get more listings coming through if rates are lower because people aren't mortgage locked the same way.
Right.
There's always that marginal person who, hey, when rates were 8%, we can't consider this, but now that they're 6.5%, yeah, we think we can do this because, remember, not everyone has a mortgage at 2.875. There are a lot of people at 3.5% to 4.5% mortgage rates, and maybe they've been in those for 10 years, and so, yeah, we can move, and because the new mortgage we'd be taking out is at 6.5%, but it's on 30% or 40% of what we were previously borrowing, our cost is going to be the same as what it was before.
Yeah. The non-resident or the non-single family residential piece of this is also what just has me keep scratching my head, and that will be even more dependent on where rates go. But if you go, I know that all the focus has been on commercial office buildings and what are we going to be able to convert. But if you go read some publications about the commercial space in multifamily, it is likewise fairly ugly. They have these big buckets of debt that they're not being able to refinance. Rent increases are not coming in where they want them to be, and there was a whole bunch of supply that came online over the last few years in the in the apartment space of things. And you're hearing stories like there are. Maybe not in the Boston area. We're talking about the typical boom bust cities here, but go take a look at the number of keys that are getting handed in Phoenix, Arizona, for example, for these multifamilies, and it's pretty severe. I'll be interested to see how that plays out over the coming months and how it could potentially impact overall prices in the single family space.
So this, I think if I were to summarize this, there's maybe a couple-month window during a really inconvenient time for a lot of people to be shopping for homes where you might be able to find some better deals than you have for the last year or so. After that, if rates stay low, you might see a lot of competition from buyers again, and it's unclear exactly how much additional inventory comes back out.
Yeah, you can see, I'm just envisioning in my mind the lines out the door at the open houses again where you just see 30-year mortgage rates with a 5 in front of them. as well as the refinancing activity that would take place in that case. It would be substantial.
I can't even think about the battles that you would see in that environment.
Yeah. And, there's so many people, too, who, might have wanted to use some equity in their home over the last few years but didn't decide to do so because of the high mortgage rates. So what does the refinance activity look like in that event? It would be hectic.
You bring up something really big there, which is cash-out refi activity is pretty much ground to a halt.
Yeah. Yeah, I have my wife's cousin was in the mortgage origination space, and he had to get a second job because there was nothing to do.
But that's another place where when you talk about, hey, things that moderate the impact of a potential recession, I mean, cash-out refis are it. As much as we like to tell people that buying boats is a really dumb thing to do with your cash-out refi, the fact is that people still do.
Oh, they most certainly do.
And it is absolutely stimulative in the broader sense for the U.S. economy in the short term, even if it's a horrible financial decision for that particular family in the long term.
And you might be sitting there like, guys, in a recession, you don't have a job. You can't refinance that mortgage in the first place. And that is certainly true. That having been said, in the worst of recessions, you do not have 50% unemployment. You don't have 10% unemployment in a lot of the worst recessions out there. And so there are still a whole lot of people who would take advantage of it if rates came down substantially.
Yeah. So it's really interesting just to game all this out and see how it may look in 2024. Let's take a quick break here. When we come back, we've got Wall Street Watch, and we're talking EV sales after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, Call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts this year. What is the new exemption for Massachusetts? And does that mean that a married couple living in Mass with $4 million in assets could eliminate their estate taxes?
Well, that is true, but let me expand on it a little bit. There is good news. Massachusetts' estate tax exemption has been increased from $1 million per person to $2 million per person, which in essence is great news because now with planning, and remember folks, with planning, a married couple can effectively shelter $4 million from estate taxes, whereas before, with planning, you could only shelter $2 million from estate taxes. But remember, if you don't do your planning and you don't have a trust in place, you will end up wasting one of those exemptions. And so by not planning now, although the exemption went up, which is good news, by not planning, it's twice as costly for people if they don't get their trust done and their planning done. You're just making a much bigger gift to the state of Massachusetts by not doing your planning.
The law firm of Cushing & Dolan has been helping families like yours for more than 30 years. Request your copy of Todd's brand new guide. It's called A Tale of Two Objectives, Reducing Estate Tax and Increasing Asset Protection, right now by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in positive territory as the S&P 500 attempts to snap its three-day losing streak as investors monitor the movement of bond yields and ready for tomorrow's big jobs report for the month of November. Right now, the Dow is up by 50 points, S&P 500 up nearly 0.75%, and the tech-heavy NASDAQ now up over 1%. Russell 2000 also up nearly 0.5% as well. 10-year Treasury yield, that is up by 2 basis points, now at 4.14%, and crude oil up nearly 1%, trading just above $70 a barrel. GameStop shares up by 1.5% at the moment after the video game retailer posted a 9% sales drop for the third quarter as the company cut costs as part of continued efforts to turn around its business. Meanwhile, Dollar General beat third quarter results and also stood by its full-year earnings guidance, as well as forecasts for revenue growth and comparable store sales. That stock up by nearly 2%. Elsewhere, shares in software developer Sprinklr down by 30% after the company's fiscal 2025 sales guidance disappointed investors. BTIG also downgraded the stock to neutral following the results over concerns on top-line growth. Bank of America downgraded Take-Two Interactive to neutral, where the bank's analyst said the video game maker's stock is in a holding pattern until the widely anticipated release of Grand Theft Auto 6 in 2025. Take-Two shares down by 2%, and AMD shares jumping by 6%. After the chip maker announced details of its new chip designed to take advantage of the boom in demand for computing power from artificial intelligence. I'm Tucker Silva, and that's Wall Street Watch.
Mike, there's a piece in the Boston Globe here. It's titled, As EV Sales Growth Slows, Mass Car Dealers Ask Biden to Tap the Brakes on Electric Transition. I find these pieces to be kind of wild right now. Just because we still are seeing EV sales growth at more than 50% annually. And the problems as it relates to overproduction of EVs doesn't stem from the fact that the Biden administration mandated companies to make any EVs right now. but rather it was that companies decided, hey, we like the valuations that Tesla and Rivian are getting, and so we're going to try to make a bunch of these, even though the demand is good, but just not as good as what we are trying to produce.
Yeah, the objections seem a little bit misguided. There are rules out there. There are tougher emission standards that will compel car makers to use electric drivetrains with a large portion of their cars, but it's not happening today. Now, the counterpoint to what you just said would be, well, you can't just switch to electric drivetrains with a flick of a switch. You need to get going early, and that is likely playing some role in this. But yeah, I tend to agree that when I look at the EVs that Ford, General Motors, and others have produced to this point, it's those that are trying to capture and compete with Tesla, not those that are trying to meet some mandate by the federal government.
And furthermore, if these companies were being compelled to do so by the federal government, then all of the recent announcements from Ford and GM saying, hey, we're slowing down our EV rollout, well, there was no policy change this year federally to allow for that. Am I wrong? Like, it was
right.
just, no, they decided voluntarily we want to make a ton of EVs right now.
Also, the fact that this is coming from the dealers themselves, I find interesting because of the trend that a lot of these automakers have used, or the tactics these automakers have used with some of these EVs. So, I mean, obviously Tesla does not have a dealership model. It's a, buy in store, test drive in store, order online model for a lot of their vehicles. And some of the other ones, hasn't Ford kind of tested that out with some of their electric vehicles too, where the demand has been really high?
They
have. I'm not sure that this is an objection to electric vehicles so much as it is an objection to the things that seem to be coming along with the sale of electric vehicles.
You know what's really interesting to me also on this? Do you remember a year and a half, 2 years ago when everyone was like, oh, Toyota's not doing anything with EVs, like, Toyota's getting left in the dust?
We said at the time, it seemed pretty forward-thinking.
I'm going to quote from here, because this is talking about one of a dealer network in Massachusetts or throughout New England that has 26 dealerships. Quote, Belize's 26 dealerships in Massachusetts, Rhode Island, and Connecticut presently have a 45-day supply of standard gas-powered cars, a 30-day inventory of hybrids, and a 100-day supply of EVs. Isn't it fascinating that no one other than Toyota is still talking about building and selling hybrids en masse, even though,
they're clearly
and again,
in demand.
small sample here, like 26 dealers. It's not huge, but it's enough. They can't keep hybrids on their lot because they're flying off the lot.
Yeah.
And I just remember everyone 2 years ago being like, oh, Toyota, like, how could you just do hybrids? Everyone's going EVs. And maybe they've got something there. Like, maybe Toyota is taking the right approach to this where, hey, if the regulations, and I'll quote from here, the EPA says that each automaker's 2032 fleet of new cars has to generate 56% less greenhouse gases than in 2026. Maybe you can get there using hybrids.
Also, I'm interested in that math. Like, is the incentive then to sell as many giant SUVs and trucks in 2026 so that you can easily beat that 50% reduction?
You can't do that because CAFE standards that are already built in talk about increases in like MPG and stuff fleet-wide from like the 2010s.
Got it.
So you can't game it that way because there are already standards that are in place up to then.
Got it. Okay.
So I don't have a dog in the fight in terms of like, hey, should we do EVs for the last, decade were prohibitively expensive and didn't really have any viable large-scale charging apparatus. It's changed somewhat now, but I'm still not convinced that EVs are the long-term solution. And I say this as someone whose family owns an EV. I think it's great, but I'm not here to say that like that's the be-all and end-all and that's where we need to go.
Yeah,
I don't know.
I don't think they're the only long-term solution. I think they are a great long-term solution, but when I say long-term, I don't think I'm operating on the same time scale that others are.
You might be talking like 30 years?
Yeah, like, by the time we see a majority of vehicles on the road actually be electric vehicles, we might be looking at 20, 30 years, not the 8 to 10 that a lot of people seem to be assuming right now.
And again, there's nothing wrong with saying, hey, hybrids can be part of that solution as well.
Right.
I don't think it has to be all or nothing. And Mark Venditti and I have talked at length about how one of the problems that we have is with the Inflation Reduction Act last year, $7,500 tax credit for EVs. Well, what if that's not the best way to go, and now you're just creating this funnel of money going to what might end up being an inferior long-term solution?
The government's never done anything like that.
No, we've never incentivized, oh, golly gee willikers.
What are you talking about? There's no track record of the government investing in technologies and products and resources that don't end up being what consumers want.
No. But I don't want to
Rhode Island. Kurt Schilling.
I don't want to go down this road, Mike. I don't want to go down this road.
Okay, fair enough.
Let's talk a little bit about oil prices while we're on the topic, and specifically gas prices, because I don't know if you noticed, Mike, but the AAA national average continuing to tick down another $1.50 today, down to $3.20 per gallon.
I only fill up when I'm in Portsmouth, New Hampshire at $3.09 a gallon. Like it.
Honestly, you should be driving to Texas or Louisiana to fill up.
Yeah, true. Yeah.
You know, it's there. Texas right now, an average in Texas is $2.68.
Dear Lord.
I saw my first $2.99 in Massachusetts on Sunday.
Peabody? Route 1?
Route 1, yeah. Yep, that area.
$2.95 by me.
Yeah.
There you go. So they're popping up. It's the $2 gas is no longer an endangered species, and based on oil yesterday closing below 70 a barrel, you got a chance that you're going to be seeing a lot of twos in the first digit within the next 3 weeks if this holds.
Yeah, we're up 1% today, or nearly 1% on oil prices today, but the trend has been way down. On September 27th, we were closing in on $100 a barrel, sitting at mid 90s, and we, like Chuck just mentioned, are now below $70 a barrel, and contributing to a lot of the slowdown in inflation that we've seen recently.
So now this is all well and good. The counterpoint on this is, hey, you've got the Saudis and OPEC cutting, left and right the amount of production they're doing.
Sure.
Despite all of those production cuts, oil can't hold its price. Is that a bearish sign for the global economy?
Yeah,
maybe. Yeah, it's not great.
Yeah.
It doesn't necessarily mean that things are accelerating upward, because in a perfect world, OPEC would love to sell an extra 10 million barrels a day at $80, but instead they're cutting, I think now by like 5 to 7 million from their peak capacity, and they still can't get it to hold where they want it to.
At some point, presumably China's economy hits a bottom, but it doesn't seem to have done so yet.
Well, here's the thing about bottoms, Mike, is they can be very, very far down.
Yeah, sure can.
I was trying to think of the right way to phrase it, and I couldn't get anywhere with it, but that's where it's, especially with economies that are managed from a top-down perspective, the economic damage when things go wrong can be way worse, because you've kind of pushed off any pain for oh so long, and now you just have to feel it unless you're willing to do what China doesn't want to do.
Right.
Which is, hey, maybe we can't rebuild this economy through the same things that got us here. So that's where things stand there. Let's take a quick break. When we come back, we'll continue to talk about China. Moody's facing a growing backlash over its negative credit outlook on China. How could they say such a thing? We'll talk about that when we return.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
Headline in the Wall Street Journal: Moody's faces growing backlash over its negative outlook on China. So I'm going to quote a couple things here. Chinese government departments and officials slammed the change, calling it disappointing, flawed, and unnecessary in various public statements. China's finance ministry issued a lengthy rebuttal to Moody's, saying the economy was recovering and that the government's finances were improving. It also said Beijing had already taken steps to address the hidden debts of local governments. Eric Chan, Hong Kong's number 2 official, called Moody's decision to lower the city's credit outlook an attempt by the U.S.-led West to smear the financial hub as well as China. Quote, its sole purpose is to use Hong Kong as a means of suppressing the country's development. This is very obvious. This all conveniently leaves out the fact that Moody also placed the U.S. on negative credit watch a month ago.
That's where I was going to go. Come on.
Like, this is a U.S.-led attempt to smear China? They just did the same thing to the U.S. a month ago. They did the U.S. first, man.
And Janet Yellen said the same thing you just did. Except she didn't blame it on a Chinese-led smear campaign or anything like that.
No. So how about this? How about the United States and China both have gotten a little bit out over their skis when it comes to the amount of debt that they've taken on, either at the highest forms of government or, in the case of China, through state-owned enterprises and regional governments that effectively end up rolling up to the government, but it's just a means to hide it from being at the sovereign level.
Yeah, I was going to say, Moody's has very different reasons to downgrade these. I know it's both been a culmination of a lot of debt, and that has happened. But in terms of the United States, it's much more about, wow, these lawmakers might actually just default on their own debt, and we don't know what that would look like. There's clearly no issue with the ability to pay said debt. The China case is Well, I don't know your take on it. It's also a culmination of a lot of debt, but I wonder how much of this is just about we don't know where the debt is, we don't know how substantial it is, and nobody knows what the Chinese Communist Party would do if it came into crisis mode.
And beyond that, we've got this schism that's building between the West and China, and typically the way that China gains a lot of capital into its country is through lots of trade with the West, and if that's changing, hey, that could cause some problems as well.
Right.
The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Mike, did you see that Krispy Kreme just launched in France?
The lines were out the door.
It's très magnifique. It's a beautiful thing to see. Is a bunch of French people flocking to eat American donuts.
I do love that image, like the snooty French people who are refusing to say the word donut in English, just lining out the door to get a donut.
What word do they say instead?
I have no idea. I just made that up.
Oh.
I'm sure they have to say donut.
Croissant.
I doubt there's a French word for donut.
Well, this is my Tucker. This is my favorite part here. Is one of the things that France is known for.
Is it le beignet or something like that?
It's the closest thing you've got.
Yeah,
it's different.
But I just love that one of the things French cooking is known for is pastries.
Right.
And you've got this line of people to get Krispy Kreme donuts. It's just fantastic.
It works there because it's not some horrible American mimic of a French product, right? Like you think about Starbucks or Domino's trying to go to Italy, and you're like, oh, that's not going to hit well. But with Krispy Kreme, it's different enough that it's not going to offend any French sensibility.
Beignet.
The other thing that I love. Thank you, ChatGPT.
Beignet.
Yes, you're multilingual. This is wonderful. It's so nice getting to talk to you. I have to quote here from this piece. Celia Leia Amarouche and Marie Besson were ready to open their wallets after seeing Krispy Kreme cameos in American TV shows that they watched to improve their English, including The Simpsons and popular crime shows. Seeing Kylie Jenner dig into Krispy Kreme donuts on TikTok sealed the deal. So I am a huge believer that one of the biggest things that America exports
It's fast food.
is culture through movies,
McDonald's.
music, and TV. And this is exactly what I'm talking about there. It really sounds like they watched The Simpsons and Law & Order SVU and decided, hey, we got to get Krispy Kremes because of this. And I love that. I'm sorry. I think it's just fantastic. And it's proof, by the way, because that's all paid for product placement, you better believe.
Of course.
People always question the value of advertising. This is it right here.
Yeah, When done right, you can get 500 Parisians to line up to buy your donuts. It is pretty fascinating. I mean, this is a chain that has had a cult following for a while. I distinctly remember in high school when this chain was not anywhere near Massachusetts. One local shop in our town, I think she would drive a couple hours to go get Krispy Kremes every time and then sell them locally. And yeah, it was the same story. It was lines out the door and just fascination with the product. So, yeah.
Now, to be fair, when they did try to launch New England, they face planted here because of Duncan.
Remarkably, yeah. It just
horrible
failure.
It's you can take a lot of things from us here in New England, but you can't take our dunks. Let's take a quick break here. We still got a lot more to come in hour number 2 here, but quick break for a couple, and then we're right back at it with more Financial Exchange.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a new guide available this month titled The Key Numbers to Know for 2024. Mike, when it comes to how much someone can contribute to a 401k plan or 403b plan next year, what do those contribution limits look like?
Yeah, so you're getting a slight uptick from 2023, where it was sitting at $22,500. You're now going to be up to $23,000 for those 401k contributions. And in addition, if you're over the age of 50, you're going to get an extra $7,500 that you can potentially put in there. All of that is before any sort of employer contribution or match. So you're now getting up to $30,500 in total if you're over the age of 50.
Mike, what about for folks who don't have access to an employer-based plan but instead need to contribute to an IRA or traditional IRA?
Yeah, so that's where those limits are much, much lower. So this coming year in 2024, you're looking at a $7,000 contribution limit for traditional and Roth IRAs. There are all sorts of rules around this in terms of income phase-outs, who can contribute, if you're employer-sponsored or not, if your spouse is employer-sponsored or not. So there are some tricky pieces here. There is also a completely different set of rules and limits when it comes to self-employed individuals. So definitely other things to know if you maybe own your own business and have a SEP IRA.
Our guide this month is titled The Key Numbers to Know for 2024, and it talks about some of the many changes happening when it comes to contribution limits, cost of living adjustments, and other numbers. 2 ways to request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Early estate planning is crucial if you want to avoid massive tax consequences and protect your assets. Cushing & Dolan are experts in estate planning and taxation, and their new free guide can help you do just that. It's called A Tale of Two Objectives, Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets away from the nursing home while reducing and potentially eliminating your estate taxes. You've worked hard to provide for your family, so if you haven't done your planning yet, call Cushing & Dolan today at 866-848-5699 and get this free guide called The Tale of Two Objectives, Reducing Estate Taxes and Increasing Asset Protection. That's 866-848-5699. Or you can request your copy online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you today, and we've got some green on the board after a couple days of losses in markets. The Dow is up 62 points, just a modest, almost 0.2% rally today. S&P 500 up 32 points, or about 0.75%, and we got the Nasdaq up 156 point to Rooney's, 1.1% right now. Even the Russell 2000 joining them all in positive territory as well. This happening with the backdrop of the 10-year Treasury actually up 2 basis points, so it's not lower yields today that's driving this. We've got oil up 42 cents a barrel to 69.80. Second straight day we've been below 70 a barrel on West Texas Intermediate. And we got gold down $1.50 an ounce to $2,046.40. So that's what we got going on in markets thus far today. Mike, before reading this article, did you have any idea that the state where unemployment is rising the fastest is New Jersey?
No, but nothing surprises me about New Jersey, so I would have said probably Nevada before I was willing to say New Jersey, but there we have it.
Why Nevada?
I don't know. They just always seem to be plagued by high unemployment problems.
It's very boom-bust.
Yeah.
You know? Yeah.
Yeah, and there's been a lot of migration to there, so you're starting from a higher. There you have it. In fact, Nevada sits there as the highest rate of unemployment in the entire country right now.
Just hasn't changed much.
Yeah, hasn't moved a whole lot. It's sitting there at 5.4%, followed by D.C., then California, and then fourth to worst is New Jersey, sitting at 4.6.
And that 4.6 is up 1.3 percentage points over the last year, according to the Labor Department. But the fascinating thing is that where it's showing up, it's all of the companies that have, like, back offices in Jersey City, all of your finance companies, all your tech companies that say, hey, we don't want to, pay for prime real estate in Manhattan for our operations team, so instead we sit you in Jersey City in the skyscrapers over there. Those jobs are getting laid off left and right because companies are trying to cut their, kind of what they're doing internally. But what you are seeing in New Jersey is that there is a ton of demand for healthcare workers, for people at restaurants, for people in construction, trades, manufacturing. You're still seeing net gains in all of these areas. It's just that Jersey City happens to be this hub for white-collar back-office employees. And so that is the group that is being laid off in large numbers over the last 12 months.
Yeah. When you talk about New Jersey, you are looking at a fairly small state, effectively. But it is not.
State.
It is not immune to the same, general trends that we're seeing around the rest of the country. In the rest of the country, what we're seeing is that there is still immense demand for some types of jobs, and not quite as much for some of those middle management and white-collar type work.
Do you know that New Jersey is the 5th smallest state by land area in the country?
5th. Okay.
Can you name the smaller ones?
Rhode Island.
Uh-huh.
Maryland.
Nope.
Massachusetts.
Nope.
Delaware.
Yep.
No, I can't.
Connecticut.
Okay.
Vermont.
Well, so here's the problem with 5th, because, again, it depends on how you interpret it. In some sources, I'm actually seeing it's the 4th smallest, but it depends if you include the water area from the lakes within the state as land area.
No,
I
that's
see.
water.
Yeah, I'm not buying
Otherwise,
it.
it would be called land.
So, in that case, Hawaii ends up being your 4th, okay? And then New Jersey is the 5th smallest. If you include total area, then Jersey is 4th, then New Hampshire, Vermont, Massachusetts, then Hawaii.
I see.
It's very confusing.
Indeed.
I'm glad we went down this path because
Me too.
ultimately it's useless. When we talk about this, Mike, is this something that is a broader sign for the rest of the economy, or is it unique to Jersey? I would make the argument more of the latter because of the unique composition and location relative to Manhattan.
Yeah, I don't think it should be ignored because unemployment has
Sure.
risen by 0.5% over the last 6 to 9 months nationally.
Yeah.
So, let's not lose sight of that. It's risen to a point where it is still an immensely tight labor market. So, I don't want to confuse things. And that rise in unemployment rate has not been happening because of a net increase in job loss.
Correct. You've actually had net jobs gained over the last year still.
It's just
About
that more
29,000.
people are coming back into the labor force that might have left, or just new entrants that are college graduates are entering the labor force, whatever it might be. The labor force is growing, which is why you've seen the unemployment rate rise, not because of net layoffs. And that's a very important distinction when we're talking about the possibility of recession. We've gotten close, right? There were only 150,000 net new jobs created in the month of October, and tomorrow we'll be getting that number for the month of November. But that is an important distinction that, yes, unemployment is rising, but it's not because people are losing work on a net basis.
Why pandemic early retirees aren't going back to work, and I would say it's because it's no longer early retirement. Since it's been almost 4 years now, it's on-time retirement if they're still retired.
But this is an important factor here. So if you take a look at 2019, the labor force participation rate at its low, low was 24.5%, high was 26%.
You talk participation for what demo?
65-year-olds and over with no disabilities.
Okay.
Since the pandemic, we have not gotten over 24.4%. So we're currently sitting, as of the October read, we were sitting at 23.7%. Down from that was a 2020 high of 26% in February of 2020. I know that these are relatively small differences, but we are talking about a large number of total workers. And the labor force participation rate that we're seeing with those seniors, those 65 plus, is something that we haven't seen since the 2014 timeframe.
Mike, do you know what the highest labor force participation rate, and I'm looking total, not just on, what was the term you used?
No disability?
Yes.
Okay.
Do you know what the peak of it was?
Time frame or numbers?
Numbers and time frame.
For all
65 plus peak. Just for context, right now it's 19.3%.
I would have thought somewhere right before the pandemic, but maybe not. Maybe 90s.
Incorrect.
Okay.
The peak labor force participation rate for 65 plus. November of 1949.
Okay. Yeah, I should have guessed that.
28.4%. Interestingly, this idea of, hey, you get to 65 and retire, it really developed in the 50s, 60s, and 70s with the advent of pensions that in many cases fully vested at age 65. And before that, you had much higher percentages of people continuing to work into their late 60s, actually.
Ooh. Do you know the life expectancy for somebody in... I don't know if this is born in 1949 or in 1949 what life expectancy was.
I'm guessing it was probably the low to mid-70s.
Worse. So for men, 65.2, and for women, 70.7.
But that's probably life expectancy at birth, not life expectancy at 65.
Not life expectancy at 65, but that is pretty low.
Because that also gets to the fact that, look, it's so hard to believe that we're not that far removed from this. But you go back 100 years ago, and child mortality rate before age 5 was 20% still.
Yeah.
We're not far removed from that.
So let's go back to the 65-plus-year-olds. I made the case earlier on during the pandemic that we were going to see this swing back. You haven't. Hasn't happened. I made the case that, look, there was going to be enough economic pain and people were going to run out of stimulus money and they'd have no choice but to return to the labor market. I think in hindsight there are a few things that are buffering those 65-plus-year-olds. Generally, if they own a home, their mortgage is locked in and they're not buying new homes, and they might not even have a mortgage at all. So the inflationary pressures that people have felt from higher mortgage rates or just higher debt rates in general, not as significantly felt by the 65-plus-year-old demographic. Likewise, those who are collecting Social Security, your incomes in those specific cases aren't impacted by job loss, aren't impacted by industry change or anything along those lines. Your inflation impact has been whatever the CPI prints, and that's largely kept up with inflation. And so for a number of different reasons, we're not, I don't know that I have the answers as to why 65-year-olds aren't coming back into the labor force in the way they did in the late 2010s, but it's been 3 years and it ain't happening.
Let's take a quick break here. When we come back, we're going to be joined by Ted Rossman from Bankrate. We're talking holiday tipping, and we'll have trivia right after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
All of us at the Financial Exchange are truly thankful for being part of this year's DAV 5K. The event was a massive success, and credit to all of you who registered. Now, if you weren't able to attend but would still like to make a donation, visit dav5k.boston for all the information. That's dav5k.boston. The DAV 5K Boston was presented by Veterans Development Corporation.
Joining us now is Ted Rossman from Bankrate, talking to us about topical subject this season, holiday tipping. Ted, thanks for coming on. Appreciate it.
Of course. Thanks for having me.
So, talk to us about who we're seeing people say they're going to tip for this year. I find this story refreshing because we've been covering a lot of stories about tip creep, and I don't think these ones fit into that category. These are your fairly typical ones that I see usually getting a tip towards year end, at least in my view. So who did you survey, and who did the people talk about tipping this year?
We're seeing a noticeable uptick in holiday tipping. We worked with YouGov to survey about 2,500 people about their holiday tipping plans. And whereas last year, the frequency of tipping was up and the amounts were down, this year, the frequency and the amounts are up. So maybe this is showing progress on the inflation fight. We're seeing the most tipped holiday professions are housekeepers, childcare providers, and teachers. All of them were at or a little over 50%. And for the most part, we're talking 25 to $50 is kind of the median tip for a lot of these professions. A little bit less likely to get a tip is your landscaper or snow remover. Mail carrier, about 3 in 10 are tipping them. About 1 in 4 are tipping the trash and recycling collectors. But really across the board, we're seeing the frequency and the amounts going up.
Are there any guidelines on, the types of tips or gifts that you're supposed to give here? I have to say that I would feel a little bit strange tipping cash for my kids' teachers. Is that what people are doing?
I think with teachers, it's often framed more as a gift, especially a class gift. Maybe all the families kick in some money and you buy the teacher a gift card or something like that. I think there are 2 ways to look at holiday tipping. One is sort of the flat amount, which is often maybe $20 for the mail carrier or the trash and recycling guys, and maybe a little bit more if you have a housekeeper. The median there was about 50. The other way to look at it, though, is maybe up to the cost of one service. That could be a really nice holiday tip if you have a weekly housekeeper, let's say, or babysitter, or even somebody like your hairstylist, who I think you should be tipping throughout the year. Maybe you up that tip around the holidays, maybe potentially as high as the cost of that service. Now, I get that money's tight for a lot of people. You can't tip everybody. So the advice would also be to kind of rank order who's maybe gone above and beyond. Who do you most want to reward this holiday season?
Ted, when we look at the just general results here, which you're saying, pretty dramatic increases in terms of tipping from 2021 and even an increase from 2022. In spite of that, the data that we get on how consumers feel about the economy and their outlook on things has been really very negative and not dramatically improving. What do you make of that dichotomy, just the feeling that people have right now where, they're willing to shell it out for those tips, but also at the same time saying inflation's terrible, the economy's bad, and not responding positively to things like the University of Michigan Consumer Sentiment Survey?
I think this may be the biggest economic theme right now, is that disconnect between the 80% of Americans who recently told Pew Research that the economy is either poor or fair versus a lot of the data that's a lot more positive, like that 5% GDP growth number last quarter and the fact that the unemployment rate is still close to a 50-year low. I think that inflation is really weighing on people psychologically. And I think specifically to tipping, we see a disconnect as well. The holiday tipping picture is brightening. But over the summer, we did a survey about year-round tips, and that was pretty negative. 2/3 of Americans had a negative view of tipping. 30% thought tip culture was out of control. Similar figure were annoyed about those pre-entered tip prompts that you see at the coffee shop and elsewhere. I think people may be separating these in their mind, though. I feel like the holiday tip is more of a generous gratuity for people that we see a lot and we interact with face-to-face. It seems that people are feeling better about tipping those service providers than maybe something that's more transactional, like a quick coffee or sandwich order.
Ted Rossman from Bankrate joining us today to talk about holiday tipping and the trends that we're seeing over the last few years. Ted, thanks so much for joining us. Appreciate it, and talk to you again soon.
Sounds good. Thank you.
All right, time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited, dine-in only. Today is Larry Bird's 67th birthday. Larry Legend played 13 seasons for the Celtics, winning 3 championships along the way. Bird retired from basketball after participating in the 1992 Summer Olympics with the Dream Team. Trivia question today. How many times did Larry Bird win the NBA MVP award? Once again, how many times did Larry Bird win the NBA MVP award? Be the 7th person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on tomorrow's show. 617-362-1385, and the 7th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mike, what do you make of Jamie Dimon, CEO of J.P. Morgan Chase, saying, quote, "If I were the government, I'd close it down," referring to the cryptocurrency industry?
He's been amazingly consistent, just like his calls for a recession over the last 2 years.
Am I detecting that you don't necessarily think this is the best thing for him to be saying and that it's inaccurate?
I think it's impractical. I think there's plenty of reasons that I still think that crypto needs a heck of a lot more regulation, so it's not an area that I necessarily disagree with him. Go see how Hamas has previously gathered a whole lot of their funding through cryptocurrency, according to the Wall Street Journal. So I think there are immense problems with it, and Jamie Dimon just saying that the government should shut it down is probably not practical.
So here's the thing. The whole promise of cryptocurrency is a decentralized, anonymized ledger that allows transactions to occur on it. I don't know how the purity of that idea can stand if you decide, hey, we're going to regulate it, because as anyone who works in the financial business knows, one of the basic tenets of what you have to do before you even touch any money is what you call know your client protocols. You have to be able to identify who they are and say they are not laundering money or doing illegal things with it.
Right.
And I don't know how those two things can coexist: an anonymized, decentralized ledger and a regulated crypto industry.
They don't.
That's kind of where I'm going. Let's take a quick break. When we come back, the answer to trivia is next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There actually is. Now, we talk about, doing estate tax planning, which I tell you should always do. So even higher net worth clients should put together their basic estate planning. I call that the foundation of their estate plan, of anyone's estate plan. And for higher net worths, to be using, revocable trust. There may be one or there may be two, but you want to put those together first. And that helps us shelter what we can. But to leverage your estate tax exemption that is going to be going down in 2026 to about, $6.5 million indexed for inflation, how do we use it? We can gift it. And if you gift it away, think about what you want to gift, but you can put it into another trust called a gifting trust, a spousal lifetime access trust that allows the spouses each other to enjoy what's in the other one's trust, but you've effectively given away the asset. So all that you've given away plus all the growth will be estate tax free moving forward, and it can even skip a generation from there. So planning is critically important.
The law firm of Cushing & Dolan has been helping families like yours for more than 30 years. Request your copy of Todd's brand new guide. It's called A Tale of Two Objectives, Reducing Estate Tax and Increasing Asset Protection right now by calling 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Trivia question today was, how many times did Larry Bird win the NBA MVP? It'll be 3 times. Bird was the league's MVP in the 84, 85, and 86 seasons. Larry Bird joined Bill Russell and Wilt Chamberlain as the only players to win 3 consecutive MVP awards. Karen from Princeton, Mass, taking home our Financial Exchange Show t-shirt, and Karen's also registered to win a $100 gift card to Applebee's, which we'll give away tomorrow. Trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only.
Mike, you ever been to a drive-thru?
A drive-thru what?
Just anything. It could be drive-thru anything.
A bank, a pharmacy, fast food. What are we talking? What kind
you
of
ever
drive-thru?
driven through?
Yes, I have.
Okay.
Movie.
My favorite is a drive-through liquor store. You ever been to a drive-through liquor store?
Those are in Texas, right?
They have them in New York, too.
Do they?
Or they did near me.
Didn't know that.
Way upstate. Needed to pick up a keg for a party. They just plop it right in your trunk.
You can do a drive-through keg.
Yeah. Oh, absolutely.
Wow.
The more you know.
Drive-through gambling kiosks now,
That
there are.
Sounds rough.
Why?
That's just sounds sad.
Yeah, I just want to pound the under on the Patriots tonight. Yeah, I would just drive through.
Sounds awfully sad.
Why do you need to drive through instead of doing it on your phone?
I'm just saying.
Maybe
like
you don't, maybe you
I
don't
understand.
have a phone.
I understand liquor because you can't just you can't materialize it from your phone, but you can gamble on your phone.
There are apps that deliver alcohol.
There are.
Where are we going with this?
I don't know.
So, in the last year or so, there's been a company by the name of Presto Automation that has pitched restaurants on the idea that it can simplify their drive-through ordering process through the use of AI. Now,
Excellent.
First of all, this is just wrong because it's not really using AI, it's using voice recognition.
Yeah, it's
which,
basically a Google Home built into a drive-through kiosk.
Yes. The other piece that's kind of problematic is that they've now admitted in an SEC filing that they have off-site agents who help to cover more than 70% of customer interactions that otherwise would have been messed up by the system of voice recognition.
Well, geez, why'd they go disclose that?
It's probably, some material fact. Things
also
along those
because
lines.
the company was notified by the SEC back in July that it's under investigation over disclosures made regarding certain aspects of its AI technology. So it probably had a little bit to do with that, would be my guess here, too.
The sentence after that also contains my new favorite name that I've seen in business, which is Javier Casanova.
That is a pretty good name, huh? Yeah.
It's pretty darn good.
Yeah. Well, this is unsurprising and, I don't know, one of the more humorous disappointments in artificial intelligence. By the way, in and of itself, just having people in the Philippines taking drive-through orders does seem like, in and of itself, not a bad business idea without the advent of voice recognition and artificial intelligence. I could see this applying to a number of different scenarios. Specifically, I would like the Hertz Rent-A-Center at the Phoenix Sky Harbor Airport to employ this one so that they don't have a line of 65 people like it did last time. Like, just, hey, little kiosk that'll spit out my keys and I can talk to somebody in the Philippines rather than waiting on the 2 employees that are there in person. Doesn't sound like a bad business idea, quite honestly. You don't even need the artificial intelligence.
It's, again, this is the kind of stuff that you just expect to see in a hype bubble like this.
Yep.
It's unfortunate, I think. I don't know if it's actually unfortunate.
It's unfortunate because it's unfortunate that companies like this
just make stuff up,
lie to the general public. Yeah,
that's
the part
the
that's
unfortunate part.
It's not. I don't think it's unfortunate that the technology didn't work. Like, that's part of new technologies. Is you're going to try and adapt them. They're not always going to work, and they are going to require human interaction. And that's, I think, a good news story. That hey, these are not products that are ready for prime time to just wipe out the American labor force. Clearly, Amazon has admitted the same thing. The areas for opportunity for automation are those in which it's human-assisted automation and or robot-assisted processes. And that's the good news from the story. The bad news is, there's probably dozens of other companies out there touting their chips or technology around artificial intelligence that are actually just hiring people in the Philippines to do the job for them.
So there's that.
That part's disappointing. Folks, want to talk to you about the new guide, brand new guide from the Armstrong Advisory Group for the month of December. It's all the key numbers that you need to know for 2024. Not only does this make pretty decent reading for the holidays as we close out 2023, but honestly, it's just a great quick reference guide that you can have for 2024 when you're trying to figure out things like income tax brackets. Maybe you're worried about where IRMA kicks in on Medicare, or the earned income tax credit is in here as well, and all sorts of information that you might need to know if you are making gifts or contributing to retirement accounts this year. All jam-packed into this new guide for the month of December. Again, the name of the guide is Key Numbers to Know in 2024. And if you've got questions about how your taxes are going to be impacted by an ever-changing IRS changes and inflation updates to all of the numbers that you're familiar with, call now to get a free copy of your guide this month from the Armstrong Advisory Group. Again, it's Key Numbers to Know in 2024. The number to call is 800-393-4001. It's also available. You can request it online at armstrongadvisory.com. There's a monthly guides button right there on the front page. Again, that's armstrongadvisory.com or 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Few things that I learned from McDonald's Investor Day yesterday, Mike. First, I didn't know that McDonald's had 41,000 restaurants worldwide.
Pretty wild, isn't it?
It's a lot of restaurants.
Indeed.
They also said they're trying to get to 50,000 by 2027.
Yeah.
So it's 9,000 more in a span of 4 years. Whew. Next thing I learned, McDonald's has a loyalty program, and they're trying to get 100 million new members into it over that time span. I got to say, I am a big proponent of fast food. I really think that being a loyalty member at a fast food chain is a bad idea for your health.
Yeah, like it's not substantially worse than having a loyalty program at Starbucks, but it probably is worse.
Having said that, love McDonald's. You know, I basically am in a loyalty program even though I'm not, so maybe I should actually join. Right?
Yeah, I mean, do you use app-based ordering for any other food places?
The only one that I use with any regularity is Panera.
Yeah.
And I think it's great. Like, I think ordering on apps is fantastic. And this is where I do think McDonald's is testing something really cool. So they're launching a new chain as a test in mostly Texas, I believe. It's going to be 10 locations over the next year. It's called Cosmic, COSMC''S. And the premise of it's based on a 1980s commercial where an alien comes to Earth and, you know, eats McDonald's and thinks it's great. And what I think is really interesting about what they're doing here is it pretty much is going to have no dining room, so you don't need like much floor space to do one of these. The ones they're building are going to have 4 drive-through lanes. So think of it this way, in that it's going to be a much smaller physical footprint for the building, and the space that you save from that building, instead you can put into the drive-through lanes, because they're seeing more and more people wanting to do online ordering, and this can get people through faster. The menu's going to be completely different from McDonald's. It's going to have some weird stuff on it that, quite honestly, I mean, whatever. Like, they're going to have...
It's going to be a lot of drinks.
Turmeric spiced lattes, pear slushes, and churro fraps.
The turmeric spiced latte was the only one on there that caught my eye.
In any case.
Yeah.
An avocado tomatillo sandwich. I mean, like, these are just not things that...
Yeah, you got the McMuffin on there, though.
They got the McMuffin, and then, oh yeah, here's
hash brown
McMuffin.
Bites.
Like, okay, right, I would do the hash brown bites in a heartbeat.
Yeah.
But what I think they're actually doing is using this to test out a new format for, hey, when we build new McDonald's locations in the future, how do we optimize it so that we can do more app-based orders and get more orders through more quickly? And that's what I think they're doing, using a separate menu and separate theme or separate franchise type to do.
Yeah. So if you want to hit this up, the first one's opening later this month in Chicago, in a Chicago suburb. I'm not sure which Chicago suburb. It's a pretty big city. There's a lot of Chicago suburbs. So stay up to date on that one, but I'm hoping to visit one of these.
And this gets at data from, there's a market research firm called Circana. Only 14% of fast food orders are eaten in chain dining rooms this year.
The only time I ever do it is when I have my kids with me.
So I used to do it. There's there's McDonald's all over like 128, and I'd stop there and sometimes eat there. I don't have as much time, so I find that I'm just using the drive-thru and going now. But otherwise, you do kind of look at a lot of that space, and you're like, I'm paying to build this, I'm paying to heat this, I'm paying to light all of this.
Yep.
And it's sitting empty most of the time. This is a huge waste of space.
Domino's has the right model for this.
Yeah, they do. You're seeing more stores, more chains doing this too. Chick-fil-A is going to be trying 4-lane drive-thrus in Atlanta next year. They think they can do 720 vehicles an hour. So that's, I mean, to put that in perspective, that's 12 vehicles a minute that they think they can get through a 4-lane drive-thru.
Be pretty wild.
Isn't that insane?
Yes. Yes, it is.
I mean, let's do the numbers on this here just for a second. We got 720 vehicles an hour. Average order at a Chick-fil-A is probably, what, $20?
Yeah. For how many people?
50 yeah.
$25?
For how many people are we talking?
Well, I figure one person is probably close to 10 now. And so the average car going through might have 2 people.
Okay.
$18, let's make it.
Right.
Sound fine?
That's fine.
You took issue with 20, but you're okay with 18?
Yes.
Just making sure.
Okay.
Yeah, Tucker's very precise. I appreciate
Well,
it.
because my Chick-fil-A order is like $8.70 something or whatever. That's just me.
So you can do $13,000 an hour in orders. On a weighted basis, maybe you get like 6 of those hours a day where you're really cranking through. $77,000 a day. Chick-fil-A is only open 6 days a week, so instead of 365 days a week, you got 313. Okay.
Probably closed on Christmas, too.
Okay. Take off another 70. Assuming they do max capacity for the equivalent of 6 hours a day, $24 million a year you can do with that rate.
Did you count for Easter?
Easter's a Sunday, already closed.
Good Friday.
Yeah, that's right. It's Sundays.
Yeah, true. Okay. Fair enough.
Well, Good Friday's not a Sunday.
Yeah.
So I didn't account for that one. Take off another 70,000.
Christmas is on a Monday.
But the scale that you get to on this is nuts. Just to put this in perspective.
Thanksgiving.
And granted, there's been inflation. I appreciate you, Tucker. I'm just going to keep going. In the 1980s, y'all remember the Hilltop on Route 1?
Oh, of course.
So the Hilltop back in the 1980s was actually the highest grossing restaurant in the United States for a couple of years. Wow. It did about $30 to $40 million a year. Granted, inflation has obviously impacted that. That would probably be somewhere in the ballpark of like $120 million.
Oh.
It'd be like $120 million today
Be
on an
publicly
annual
traded,
basis.
probably.
But if you can have one Chick-fil-A doing 20% of that because you're doing 720 orders an hour, my goodness. Some of the stories, by the way, about the Hilltop from its heyday, where I think they would go through like 20,000 heads of lettuce in a week or something like that. It was just something insane.
Just disgusting scale.
I'll see if I can pull it up. Let's take a quick break, and I'll see if I can get some of the
dive into that.
stats, because it was just insane what it was doing at its peak. So, quick break. We got Stack Roulette coming up next.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The cold weather is here, and if you haven't done it yet, now's the perfect time to start planning your winter getaway to the U.S. Virgin Islands. Explore St. Croix, St. Thomas, or St. John, and enjoy incredible beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, so I found the detail about the hilltop. It's from a piece in the Boston Globe from 1987.
Ooh.
And this was the year after the hilltop did $26.9 million in sales and was the highest grossing restaurant in the United States. Here's what they did, just in terms of some of the stats that are out there. They had 42,000-pound trailers of beef come in 5 to 6 times a week.
Oh, my God.
They used 120,000 dinner rolls a week, 3,500 pounds of butter, and 200 cases of French fries. There is a person in the kitchen who spends 5 hours a day just wrapping baked potatoes in aluminum foil.
It's a rough job.
On a typical Friday, customers consume 1 3/4 tons of seafood. That's 3,500 pounds of seafood on a Friday. On a single day, the Saturday of 4th of July weekend, the butcher shop, not even the restaurant, the butcher shop did $330,000 worth of business.
Yeah, I remember going to the butcher shop there. It's huge.
It's just insane. I mean, again, you think about how big the place was. It was, I think, either 1,400 or 1,500 seats.
It was 1,500. I've been checking out the Wikipedia page while we were talking about it. They actually filed to go public in 1992, but had to pull it. Did not get enough interest.
Interesting. So, yeah, that is the legend of the Hilltop, which now, like everything else, is condos.
The cost of hiring au pairs could double under a Biden administration proposal, and quite honestly, long time coming. This has been the case in Massachusetts, and the demand for au pairs in Massachusetts has cratered. While au pairs have increased in the rest of the country by 4% year over year, Massachusetts saw something like a 50+% reduction in demand. If anyone's unfamiliar with the way this works, au pairs are, to my knowledge, one of the only groups of workers out there that have no minimum wage, or they're not subject to federal minimum wage laws. They can come here and work, and they're just given a stipend of, as little as, I think, $170 a week for up to 45 hours of work. And like I think there might be some middle ground here, but you can't just have somebody come and work in the United States for $3.50 an hour because you think that's reasonable. It's putting American workers out of work too. Like, how is an American worker supposed to compete with somebody who comes over here from Hungary, wherever it might be, and can get paid far below the minimum wage? Plenty of people will call out differences. Like, if you're here on a J1 summer visa, I do understand that you need to pay for rent somewhere, and that's, not factored in here with au pairs who live inside your home and you're responsible for feeding them and things along those lines. And so I do think those should be taken into account. But
the problem is if you're able to pay someone, what'd you say it was like $175 a week?
Yeah, I think that's the current minimum.
Then if you're not being very nice to them, they become dependent on that, and so they can't leave.
Yeah. I was wrong. It's $4.35 an hour is what it comes out to.
Still probably a little light.
Yeah.
Still a little light.
I really want steak, by the way. I just want to point that out.
Well, we can...
Did my au pair story make you think about steak?
The Hilltop and Butcher's.
Okay, got it.
I've just been thinking about it the whole time now. Sorry.
Well, let's take a quick break, have a steak, and we'll
Jobs
be back tomorrow. Jobs Friday tomorrow on the Financial Exchange.
Building a solid